Hi, good morning, guys. Can you please confirm if the audio video is all right? We just okay. It seems like it's working. We're just testing out a different software today for streaming purposes. Hi, hello. Nobas, how are you doing, Nobas? Nobas is saying, is 300 hours still realistic for level 1 out for an undergrad if I come from a finance background? I don't think we never thought 300 hours was realistic. I think at FinTree we've been recommending on an average candidate to do between 600 to 1000 hours. I don't think 300 hours ever really made sense considering the kind of competition you have in the CFA program now. You have to put in sizable more time. One of the things that has happened with CFA program is the size of the syllabus is quite front heavy, which means there's a lot of curriculum in terms of size and content at level 1 compared to level 2 compared to level 3. Level 3 तो काफ़ी छोटा है. So therefore, in general, 300 hours I think at level 1 does not work, in at least in our experience. All right. Anyways, hello to all of you again. Good morning. So last time I discussed that we would be doing some discussion on stocks every week apart from the usual AMA session that we do, and I requested you for some recommendation on what stocks and what ideas to discuss. So I've received a few recommendations in the comments of the previous video. I will be answering some of them, some that I understand, and then I will try and answer some of the questions that you might have on the chat box today. All right, that's the format. Now, just give me a minute so I can share my screen with you. Okay, my screen should be visible now. I'll start taking the question, and then somewhere in between, whenever we come across the stock, we will talk a little bit about stocks as well. I've already identified one stock to talk today, which is going to be Ethos Limited. It's a watch retailer. We did some work in financial modeling class on this stock some time back, so we'll talk more about this stock somewhere between the session. But right now, we'll start with the questions right away. So here's the question number 1. Has come from Archit. Thankfully, he's given a TLDR version. Too long, TLDR is too long, didn't read. How does a relative skill matter in manager selection, especially when aggregate skill rises and luck influences outcomes? What's your perspective? So the OCIO was asked, how do you manage selection? He said it's varied by asset type, but very high level in the context of skill. Absolute skill is pretty easy to find these days. The question is, what is relative skill when aggregate skill level? God knows he kya chal raha hai ye. Archit, I have no idea what you're talking about. If you're talking about finding out the fund manager, appropriate fund manager, there is a huge checklist. I mean, depending on whether you're an institutional investor or a retail investor, right? If it's a retail investor, you typically look at what's the investment philosophy, framework, past track record, whether fund manager sticks to the philosophy and those kind of things. But if you're an institutional investor, you actually do a large number of due diligence checks, right? Something as trivial as the quality of the advisory services of firms that support the fund manager. For example, who are their custodians, trustees, who are their legal team. So you do due diligence checkpoint. As far as the skill level is concerned, the typical practice in the industry is that all the fund managers that you have, you basically rank them and put them into different quartiles, right? So my framework for looking at fund manager, I generally wouldn't want a fund manager who's done number 1 for the last few quarters but was not doing well earlier. I would rather look for fund manager who have somehow managed to remain consistently, either in quarter one or quarter two for a long period of time, because that shows your ability to, perform better irrespective how markets are consistently over a period of time. So that's the general framework I would look for. Or I'll move to subsequent questions. Wow, again, stock and flow edge. Appreciate your genuine expertise and openness to share your knowledge. I start by downloading stock lists from NSE BSE sites, then narrow them down to a few thousand stocks for deeper analysis. A few thousand stocks for deeper analysis. My initial step involves applying qualitative filters such as exclude PSU sectors. I believe incorporating few strong quantitative filter is also crucial. Could you suggest some no-go and high quality quantitative filters, which is difficult to manipulate to a large extent? Can you recommend for high quality quantitative screening? Also, I remember you mentioning that manually filing the financial data from annual report to ensure quality over various screeners. At this stage, it's challenges to do for every stock. If there are high quality free sites, that's great. I'm open to subscribing to paid ones if necessary. I know you prefer discussing stocks in the session. I share one of them in next week with my rationale. I appreciate your thoughts. Don't want to ask too many questions in one go. Okay. All right. Actually, there are a lot of questions here, but I like the questions that you've asked. See, what you're trying to do is, you're basically, so the idea is like this, right? We have about 5,000 stocks in India. Now, technically, it's humanly impossible for anyone to sit and study all the 5,000 stocks, right? That's probably will not happen. So, what you want to do is you want to figure out some way to kind of reduce the number of stocks and maybe bring them to, let's say, a manageable 200, 300, which we call as typically your investment universe. So you say, okay, there are 5,000 stocks, but I don't have to look at all the 5,000. If I can run some screeners, some filters, then I have to only look at 200, 300 stocks, which are, at least better manageable than the 5,000 ones. So question is on how to write these screens, right? And there is no simple answer to this because, every investor will look for different things. So my approach to this has been, as I discussed in the previous class, that I have a large number of kind of a negative list, right? So what could be some of the quantitative screens that I would run? For example, I would look for variability of operating profit margin. If there's a very high variability, like a standard deviation of operating profit margin, then maybe the firm does not have pricing power, right? Especially if you take, let's say, 10-year data and you see that operating profit margin either falls or increases quite dramatically over them, then probably there is no lack of pricing power, right? So maybe you can skip them. So that could be one negative list. On positive list, you can get really creative, right? You can write ROEs, you can write ROC screens, you can write cash flows. There are thousands of screens on Screener. One screen that I like is, and see, so I'll tell you an example so that you can align your thought process with quantitative numbers. Let's assume that I want to search for companies which have invested very heavily in capex, but that capex has not given them new revenue yet, okay, or incremental revenue yet. Maybe they will, but not at the moment. So then I will look for screens like where gross block of current year is maybe 2 times the gross block of, maybe last year, right, or a year after that. So my gross block is doubled. Gross block means the assets on the books. And at the same time, the revenue of this year is not more than 20% revenue of last year. So आपके assets बढ़ गए. You have a higher base of assets, but you don't have a base of revenue. So then you can go and look at what's happening in these companies one by one. So there is no one formula that fits, to everything. I think depending on the type of investment philosophy you practice, your screening needs to be done. I have in the past invested in certain so-called turnaround stories, Luckily, some of them worked. Now, if you do typical turnaround story, you're buying a stock when the sab ganda hai, right? The margins are at worst. The company might have debt on the books. There might be leverage. These days, people are talking about SpiceJet in that context. And a SpiceJet ki baat kar rahe that maybe it's a turnaround story, not a recommendation of course, and I haven't studied it. So if you do that, then none of these filters will work, correct? Then you will probably have to run different filters. For example, just look for stocks which have fallen 50-60% from their peak. Look for stocks where operating profit margin has actually deteriorated. Look for stocks where debt has increased, right? The companies are in trouble. So your investment philosophy needs to match with the type of screens you run. So hopefully that gives you some sense. The shortcut for converting PDF data to Excel file, there's an Amazon tool we discovered later on. It's an AI based tool. It's called Textract. I'll write down the name for you. It's called Textract, Textract from Amazon. Apparently you have to have some US account or some, I did something, I don't remember. But in Textract you upload PDF files and it kind of gives you a very tabular, nicely done Excel version of those PDF files. Okay, so that's I think a very powerful tool. I mean, I'm sure there are other tools as well, but this is the one we use. It's a paid service, but it's fairly low cost. I think 10 cents per page or something like that, so that you can explore. Okay, next question. Can you explain salary trajectory in equity research along with positions and time taken to scale? So if you remember in the last AMA session, we discussed that generally there is not a lot of these research firms have horizontal setup. There is no a lot of vertical scaling up. The designations vary, but typically, let's take maybe a buy side example. Your entry level pay could vary anywhere between 3 to maybe let's say conservative side 7 lakhs per annum as a fresher, right? In markets like Pune, Mumbai, Bangalore, I think these are the pays. On the buy side means mutual funds, asset management companies. Then once you gather 2 or 3 experience, you can expect salary to grow at about 10 to 15% per annum easily. So by the time you have 3 years of experience, some firms will start calling you as analyst, right? Some firms will call you analyst on day 0, so really varies. And then after that you become a senior analyst, right? And then maybe after that you become maybe head of research, if that designation is there on the buy side, and then eventually hopefully you become a fund manager. This is a journey of maybe 3 years. This is a journey of, let's say, 7 to 15 years for people. That means if you are exceptionally skilled, maybe in the first 7-8 years you will become a fund manager. If your learning curve is a little flatter, you don't learn enough, it might take 15-20 years. Fund manager, you're looking at anywhere between, let's say, 1 crore to maybe 3, 4, 5 crores. I mean, really there's no upper limit type of salary. Analyst, you're starting at, let's say, an average 5 lakh rupees. So you do the trajectory, right? And you calculate the compound rate of how will I reach from 5 lakh to maybe a 1 crore salary in 15 years. Designation will keep on changing. Analyst, senior analyst, associate, senior associate, head of research, varies. Sell side might have a little more structure to the organization. There might be a little more vertical steps for you to climb. So sell side generally is also pays better than the buy side initially. So you would see that a lot of sell side analysts will be paid 30-40% more than what a buy side analyst would be paid, right? That's the general trajectory. On sell side, your top designation is the head of research, right? And then then managerial roles, which is VP, director, and so on. And again, head of research should again be in the range of 1 crore to 3 crore per annum for most of the reasonable size firms. These global banks, CLSA and all of them, their pays are at least 50 to 100% more than the pays that I'm talking about here. Right? I'm talking about Indian institutions. These are roughly the ranges, so that gives you some sense. All right. Um Demansh Kumar, what percentage of your portfolio is allocated to mid-cap stocks? Good question. Um, you know, the definition is so transient, Devansh, because आज के डेट में 20,000 करोड़ वाला कंपनी स्मॉल कैप में आ रहा है, right? I mean, the small cap definition itself has changed. Uh, but but I would say that about 60 to 70% of the portfolio, even today, after I've been selling some of the small caps and mid caps in my portfolio, just because of, you know, I'm not very comfortable with valuation. But even then, a sizable portfolio is still in mid caps and small caps. How do you typically churn your core portfolio? Okay, again, a lot of questions on my portfolio, so I'll try and answer the best I can. Generally, I don't. I'm extremely, uh, extremely thoughtful about selling decisions. At times, buying, I make mistakes, but you know, you end up buying something in an impulse, but then you realize you made a mistake, you correct it. If the market's not volatile, you don't lose much, right? There's not a big penalty for making that. With selling, I've noticed once I sell a stock, then psychologically something switches, and more or less that stock kind of becomes like a no-go now. It's almost like a, you know, broken relationship of sorts. So I'm very careful when I take the sell decisions than a buy decision. And when do I sell a stock? I have, I think my main reason for selling stock and also mistake has been I've sold stock because I have not had valuation comfort with some of the stocks in the portfolio. Okay, so give you an example, I bought CDSL very early in the cycle. I discovered that stock because of a student recommendation in my Mumbai CFA classroom. It was a class, it was like I'd given some question to practice and I was walking in the classroom in the break. So we had a small talk and he said, hey, have you seen CDSL? That time I'd heard of it but not studied it. And then I looked the stock and it made a lot of sense, right? And at that time it was available at very attractive valuation. So I bought it. It was almost a 3x for me. So from 200 to, I think it went to some 600 odd levels. I don't remember, but somewhere in that ballpark. 600 पे मैंने सोचा कि बहुत महंगा है. It just like the valuation does not make sense. It looks too expensive. I decided to sell. And I remember distinctly well, this was, I think, a year after COVID in that bull rally. Within a couple of months of me selling, I think the stock price was another 50-60% up, right? And now it's, I don't know, 1300-1400 or something. So some learnings out of this. One, of course, valuation can remain a concern. It's okay to sell on valuation trigger, but this time how I'm doing it differently is I'm not selling everything in one go, right? So we don't know when the top is there. No one can time the top. The way buying decisions are staggered, like my buying has been mostly monthly SIP type of a system. The selling decision should, I think, also be staggered so that you get that dollar cost averaging benefit. So this time, some of the stocks that I've been selling, I first sold 20%, then I waited for a couple of months. The markets were still quite optimistic, so I sold, you know, the next 20%. That's how I've been doing it. Some rare situation where I decide to sell everything in one go, if I feel that the management is probably not taking certain decisions right or does not make me very comfortable with the thought process, or we find something about the management jo maybe they might have done in the past but raises question on their corporate governance, or your thesis is not playing out. So these are the stories, then you kind of sell and, you know, bite the bullet, accept your mistake and move on. What is the average holding period of your investments? लंबा होता है. I think anything that I consider as a part of core investment, um, generally when I buy, I'm thinking I would keep them at least for 3 to 5 years, but make sure that you're doing quarterly due diligence on them. Some stocks have kept longer, some stocks have sold earlier as well, right? So it depends on the scenario. But yeah, I think 3 to 5 years is what I'm generally gunning for. What's your opinion about following? It's easier to pivot. This is question is asked by Advait. It's easier to pivot from financial analyst to generic data analyst role as compared to vice versa. Yeah, I think so. I mean, see, generic data analyst would be a very stat heavy, quant heavy, software heavy type of role. Whereas a financial analyst is a very technical role. I don't think they can just switch just like that from one to another. Uh, so, and we live in a world where we need to specialize in certain domain. So I would be a little skeptical when I'm making a move like that. And honestly, I don't know if what you're saying is correct. I don't know. All right, Ojas Patki. We recently studied economics. In relating to exchange rate targeting, we learned to arrest the fall of domestic currency against the USD. The domestic monetary authority will sell USD to buy back its own currency to reduce domestic supply. जो भी गिर रहा है उसको खरीदना है. That's how this thing works, Ojas. But doing so might result in increase in money supply of USD in global economy. Won't this increase US inflation and turn cause domestic authority to soft reverse, blah, blah, blah. Okay. I'm not reading the whole question, but I'll just give you a little bit of historical perspective so you understand this better. The way to think, especially for US dollar, at least the way I think about this is, I don't think that US dollar is the currency only for the US. I think US dollar today, despite de-dollarization and whatnot, I think US dollar is the currency for the world. Right? Go back in time in history and find the reasons of why it happened. You'd find reasons in the reason for this was World War. So I think World War II, US and its allies eventually won, but allies, all the partners of the US, especially Europeans, the process of war costed them a lot, and they burned a lot of money. The industries were destroyed. The economies were terrible, right? Now, after this, US comes into picture, and again, I don't know how many of you have heard of this Marshall Plan back in the day in the US. So the main reason was, in Russia we had Stalin that time, and there was a fear that maybe the socialism or the Stalinian way of running economics might take over Europe, right? So US felt the need that we somehow have to help European countries, otherwise Russia has a physical proximity to Europe, so that socialism might spread, to European countries, or Marxism or whatever you want to call it. So therefore, US decided that we will help these European countries, and US started lending a lot of money to Europe that time. So US went to the Fed, the US government went to the Fed and told them that we have to keep the interest rates really, really low in order to be able to fund this, right? So what that did is, US dollar kind of became an important currency even in the context of Europe, right? This was in 1940s. Then 1960s, what they did, I think 60s or 60s mostly, right, when the Vietnam War was there, the US economy started struggling in this war. So what then the US decided to do, and a brilliant move, it went to Saudi Arabia, and Saudi Arabia at that time had geopolitical concerns with some of the neighbors. So it went to Saudi. It said, and I'm kind of oversimplifying this, but it said, going forward, your safety, like geopolitical safety is our responsibility. We will provide you with all the army, intelligence, everything. आपको सिर्फ एक काम करना है. And look at the tactical move. You want to basically start accepting uh, the petrol or the oil that you're selling. The currency for that oil or petrol simply has to be US dollar. That's it, nothing else. So whatever oil you sell, you make sure you sell it in US dollar. So for Saudi, it looked like a great deal. So Saudi said, sure, why not? I mean, you're handling my geopolitics, and it was a king family, right? The royal family. So it made all the more sense. So they started doing it. When they started doing it, Saudi ended up having a lot of US dollar. So then what do you do? So then the US government said, why don't you buy US government bonds? Right? So the Saudis started buying USD bonds, and eventually other oil producing nations joined in. Japan treasury started buying. In fact, China in 2000s bought a lot of US dollar bonds. So which basically means, if you think about it today, US dollar is the currency of the world, not necessary currency for one particular country, right? And therefore, every country tries to manage their exchange rate with USD, because by virtue of managing it with USD, you end up managing it with everyone else. That's the general thought process. So again, hopefully that helps. We'll move to next question. I recently registered for FRM Level 2. When can we expect recent changes, additions in the syllabus of market risk to be incorporated? Tejas, we recently have added a few sections on the market risk, and we would be adding a few more, but I'm not really aware on exactly how many changes have happened. Why don't you write a team to support team? Whatever changes are there should be implemented. And I think recently we've added 3-4 chapters, so just check once before you send us that email. Alright, Diamond Kumar again. Been working at an independent research analyst firm for 2 years. Confused about whether to go in buy side or sell side. What are the general expectations from candidate with 2-year experience in both kind of companies? Which side involved more traveling, networking opportunities? What side doesn't demand more? अच्छा, आपको सब कुछ चाहिए. I think based on what you're telling me is maybe a buy side role looks better. See, sell side roles are very industry specific. They give you one industry, could be cement, could be pharma, then you just specialize in that. So your networking will also be very narrow, because if you're a pharma analyst, you'd probably know all the CEOs of pharma companies, maybe get some time with them, you might know CFOs, but then your sphere of network is restricted to that sector. Whereas if you're on the buy side, then you're pretty much exposed to everything. Also, work-life balance on buy side is substantially better. Sell side can get really bad on, especially in the earnings season, because one analyst at times is tracking 30, 40, even more companies. So it can really compromise on the quality of life. So if you want like some sort of a side hustle time, maybe buy side would work out to be better. Plenty of traveling and buy side opportunities as well. Do you think CFA Institute will allow dual specialization in the future? Do you mean for level 3? I don't think so. I don't see a reason why someone would want to do it. See, these are just 200, 300 pages of additional curriculum for specialization. You can always study them on your own, right? So let's assume you took private management, private wealth in level 3. You want to study portfolio management, no one is stopping you, right? You can always get the books and read them. I don't see a need for dual specialization, but I don't know. Is equity dealer a good option for during CFA prep? Yeah, it's a good option to get into the markets. You just have to pass 1 or 2 NISM exams. Plenty of jobs available. It's not a great job if you're working, in retail as an equity dealer, because a lot of retail equity dealers are just trying to squeeze out more and more brokerage by churning the portfolios. But it's a good starting point. I mean, there's no harm in learning. Harshita, hello sir, I've been watching these AMS sessions. They've been truly helpful. can you share your academic and career journey? Why did you do CA, then CFA? What motivated you to become teacher? Okay, I'm generally a little hesitant to talk about myself, but probably I'll give you a little insight. I might probably take 5 minutes to answer this. So see, I come from Aurangabad. Um in my, I did my schooling in a Marathi medium school. So I did not have a lot of exposure during school days. Believe it or not, I didn't even know what IITs were when I was in school. So ये सब engineering और ये सब पता ही नहीं था. Um, the the only professional I the only set of professionals I ever met as a kid was probably doctors, you know, because you have to meet doctors every now and then, and chartered accountants. And when I went to the CA's office, my family was running a small business then. So I saw that this guy gets a lot of respect because my parents used to talk to the CA very respectfully. So मैं सोचा कि कुछ अच्छा ही करते होंगे. That was the genesis of idea of CA in my head. So I started studying CA. I shifted to Pune. Then I got articleship in one of the big four firms. I think 6 months or 1 year into the CA articleship, I somehow felt like this is not something I would enjoy doing. I mean, it was good work, but it was a little monotonous for my liking. And luckily, you know, by a pure random chance, I ended up meeting someone who was studying for the CFA program then. This guy was my boss, and I saw him once studying in the office, and you know, I went to him and asked him, you know, what are you studying? And he told me there's this course and stuff like that. Looked exciting. So he let me use his books for a couple of days to browse through syllabus and get a sense. And then I thought maybe it made sense. So then I did CFA parallelly along with the CA articleship and the CA final exams. So this is journey, and then you know, few other courses eventually because I became a teacher. Then I worked for a bit, but I did not enjoy the profile I was in, the people I was working with, and also the geography I was working in North India. So I quit my job. I came back to Pune, और मैं तब मेरा टीचिंग वीचिंग बिल्कुल भी प्लान नहीं था. टीचिंग was absolutely not on radar. I was trying to set up a boutique investment bank. Right, I'd learned somewhere like back in the day there was a good business on this thing called debt syndications, where you help a large corporate, you know, raise 100 crores, 200 crores type of debt, maybe 500 crores through a syndicate of banks, and you charge them a fee. And generally a lot of CAs were doing this business, so I decided to do this. I started working, and I did that for good 1.5 year. I had a few successful transactions, but I did not get paid, and that's because, you know, I was too naive to sign those legal agreements with clients, and you know, all of those things happened. So parallelly, I wanted to do something in my free time so that, you know, I keep myself updated with what's happening. So then that's where teaching happened accidentally. I think, you know, one of my old teachers called me. He said, will you come and, you know, teach with us for a few months for some, they wanted a chartered accountant for that AICT accreditation or something like that. And then I started teaching and I enjoyed, and then, you know, students gave the feedback, they were liking it, and वो फिर उसी तरीके से कारवा बनता गया. So teaching was never really a plan, it just happened. And I say this to a lot of people now that in the hindsight now I feel like probably, you know, everything turned out well, because like a lot, the teachers I feel like are just born the way they are. It's very difficult to become a teacher because it's such a unique profession to be in. I mean, of course, there are like commercial aspects and everything else, but at the end of the day, teacher in Indian society is a completely different phenomena, right? And you have to be able to live up to those expectations. I kind of feel lucky that I ended up being here. So that's the story. Uh, Ashish Mittal. Good morning, sir. I'm applying for jobs. I'm pursuing both MBA and CFA. I've cleared level 1 CFA. Our college doesn't get good companies. I'm in need of a financial job to kickstart. I've completed 3 months of internship. I'm applying for jobs. There's no response. What should I do? Change my resume. 120 companies, no response. Can you help finding the job? I've given exam results. Okay. Ashish, if you're a FinTree student, just talk to the placement team, get onboarded, they'll help you with the entire process. Uh, your problem right now is you're applying, you're not getting a response, right? And you've said you've applied to about 120 companies. Step number one, see if your CV is being written properly. Okay, a lot of candidates make basic errors. I'll tell you the errors. They will make one CV that fits all, where they will write, hey, I love equity research, but I also like derivatives, but I also like investment banking, or मैं fixed income भी कर लेगा, right? And then they will take this CV and then they will apply to all the jobs. Think from an employer perspective, they look at this CV and they feel this guy is all over the place because equity is a different domain altogether and fixed income is. So your CV needs to be calibrated to the employer you're sending your CV resume to, right? It just cannot be one blanket CV that you shoot everywhere. Then some other nuances. If you live in Mumbai, my experience is Mumbai employers prefer candidates from Mumbai because especially the HR community, they feel कि बाहर के लोग मुंबई में survive नहीं करते. And I have had this conversation with few of them. So what I tell candidates is that if you're applying to some Mumbai role, because that's how HR operates, you find some of your relatives who live in Mumbai, you put their address on your CV and you apply, your chances of getting a call improves. Not only that, if you're working in South Bombay and living in Vashi, maybe now we have Atal Setu, but if you work in South Bombay and living somewhere off, I don't understand Mumbai geography well, then also there is a reluctance to give interview calls. So you might not only want to see that they're in Mumbai, but also in what geography, these things also will improve your probability. At times I come across CVs with spelling errors, which is not excusable in 2024. So just make sure you're working on your CV well, and then apply to more number of companies. Maybe 120 is not sufficient. Use LinkedIn heavily. LinkedIn is a fantastic job portal as well as Naukri.com. The thing with LinkedIn is all the active employers who are currently looking for candidates you would find there, right? So just keep on doing it, you should be able to find something. Can you describe how to increase Excel speed using Mac? Rishabh, my speed is in fact deteriorated on Excel dramatically since the time I've moved to Mac. Because my office required a lot of Excel, so we used to use Windows back then. I used to have okay speed, but since the time I moved to Mac, I don't use shortcuts. I think the problem with Mac Excel is you don't have the alt shortcuts available. Then I also bought some softwares in between that kind of replicated that alt function. Milta hai kuch aise plugins. I did not like any of them. So finally I gave up. I just use Excel like a Mac user now. Just use my cursor to move around things. If you find some hacks, please let me know. Anushk Narang. I have 3.5 years mostly in financial operations. I want to build my career in core finance like equity research. What steps should I take to pivot? Yeah, I mean, just usual stuff, right? Learn basic finance. You're already writing CFA. Learn a little bit of financial modeling. Read conference calls, presentation, and read some books on markets, and then start applying. It's just the usual basic stuff. Okay, I think Yash has posted some stocks. So I've already chosen one stock for today, since probably it's the first stock I'm doing in these sessions. But I would be taking your recommendations going forward. So I'll show you what stock I've chosen. If my screen is visible to you, This company is called Ethos Limited. It's number one, it's not a recommendation. I'm doing this so that all of us learn, but I'm not recommending this stock. Also, disclaimer, I have this in my portfolio. It's not a sizable position because I like the business, but I don't like the current valuations. So it's a little bit of let's see how the story evolves type of a situation for me. What do these guys do? In simple language, ये लोग महंगी वाली गड़ियाँ बेचते हैं, right? So these guys would sell watches which typically would be 50,000 rupees to even up to, I think on their website I've seen 35-40 lakh rupee watch as well, right? And I was so surprised that they're doing that because that means they think that there are certain consumers in India which might buy a 40 lakh rupee watch. Now, why I like this space? I'm not a big fan of the company. I don't have a negative or a positive view, but I like this space, not the watch space. So what's happening in India is there is that one segment of population. let's define them as people who earn 1 crore or more. That segment of population in India is growing very, very fast. Okay, and there is a data to back this up, and I'll show you some of that data points. So if my screen is visible to you, yeah, look at this data point. Now this is some, I mean, we can get into details, but look at this. The number of people who are filing an income tax return in India where their annual income is 1 crore or more. Okay, these people were 44,000 in India in a population of such a large base of 100 crore, 140 crore now. Only 44,000 people filed individual income tax return of more than 1 crore. That number in 10 years has become 2.3 lakhs, right? So you can calculate the growth rate. It's about 5.5 times in 10 years. Now, I feel that this segment has just started because generally when we look at wealth, right, we say that either it's old money or new money. You might have heard these terms before. So your Birlas and Tatas and Ambanis, that's all old legacy family money. But let's say money made by Nikhil Kamath or Nitin Kamath, Zerodha brothers, or Zomato, Dipinder Goyal. Money made by these guys, it's called the new money, right? The first generation income. And a lot of these tech entrepreneurs or entrepreneurs in general have created large value of wealth in India. So what happens is the spending pattern of this group is generally very different than spending pattern of rest of the 99% of the country. So my thesis is that I want to chase where this money is flowing, and I want to carefully observe. Can we cut down on the noise there, please? Sorry. So I want to carefully observe where this money is flowing and where are these guys spending, because I feel some businesses and services that's catering to, it's a small population, right? Just 2.5 lakh जो report करता है, actual maybe could be more. But if these guys are buying particular products or services, then they are likely to buy expensive stuff, better profit margin, better visibility. From that perspective, I kind of like the story of Ethos. They simply into watch retail business. Now at this moment in India, everything in retail looks very expensive. If you look at P ratio, Trent has been a massive wealth creator. And if you were to buy Trent 4-5 years ago, right, at a P ratio, like let's look at 5-year P ratio. So I think, okay, 3-year P ratio maybe. Even then, trend P ratios were not cheap, right? Look at this. If I were to buy Trent in 2022, the P's were in the range of 170, 180. स्क्रीन नहीं दिख रहा? क्यों नहीं दिख रहा? एक मिनट रुको. So give me a minute. I'm sorry. Screen. Okay, I think it should be visible now. Can you see my screen now? Yeah, okay. I think it looks like it's visible. अभी दिख रहा है ना?
Yeah, very good.
हाँ. So I was showing you this number. I think then I'm sorry. I think you might have not seen this. So this is the article I was showing you. It's a Business Today article, and you'd find this multiple places anyways. So we had about 44,000 people who were paying 1 crore or more per year. That number from 44,000 went to 2.3 lakhs, right? So clearly what's happening is that ये जो अमीर लोग हैं, like these ultra rich people who are earning more than 1 crore a year, one, their incomes are growing, but their numbers are also growing really, really fast, right? Now, what I'm trying to do is basically find businesses where these people will be consumers, where these people would be spending money, because I think these will be niche vertical businesses, but these businesses might make a lot of money. Plus, generally, Amir log who are in this bracket are immune to changes in economy to a large extent. So, which means even if we have some GDP growth slowing down or something, I think this type of consumption doesn't get affected, right? Because after once you're making a crore or more, your way of looking at money changes from someone who makes maybe 10 lakh rupees per annum. So from that perspective, I like ethos. And what I was trying to tell you with ethos is it's a retail business. They simply, like, if you go to some shopping mall in India in big cities, you might see ethos store. I haven't bought the stock, like it's not a full allocation, it's still a tracking list for me. What I was trying to tell you, retail in India has been, reasonably expensive for last some time. So I was talking a little bit on valuation front. So मैं आपको दिखा रहा था कि Trent नाम का एक company है. I'm sure you've heard of Zudio and all those West Side and all those brands, they come under Trent. Now, if you were to buy Trent maybe 3 years ago, okay, look at the P ratios at which it was available 3 years ago, right? It's like someone like me would have never touched Trent because clearly, at 160, 170 P ratio, looks fairly expensive, right? But if you look at the stock price performance, in the 3 years, the stock has actually gone from 1,000 to maybe 4,000 now, right? So it's been a 3x, 4x. So basically I'm saying that retail in India is going to remain expensive. Now, ये अभी रहेगा, हमेशा रहेगा, पता नहीं है. For me personally at the moment, ethos valuations look a little stretched. It's available at a PE of about 80 rupees, 8,000 crore market cap. Profitability ratios do not look good. I mean, it's an ROE of only 10% at the moment. That because it's a very young industry, right? So you have to see ROEs and ROCs in the context of business अपने life cycle में कहाँ पे है. So this is fairly young. It's a newer segment that they're trying, which is luxury watch retail. There are just 2-3 unlisted competitors in this space. I feel this market, the target consumer of this market will keep on increasing. And these guys have been able to sign a lot of deals with some luxury brand manufacturers. And they have something called as an exclusive brand deal, which basically means they would be exclusive dealer for certain segment of watches, right? So let's say if you want to buy a Bell & Ross in India, I think that's an exclusive brand which is available only with ethos, so you can't buy with anyone else. तो अब इसमें क्या होगा, द एक्सक्लूसिव ब्रांड रेवेन्यू राइट नाउ इज, exclusive brands revenue is about 20%, 30%, somewhere in that ballpark, right, out of the total portfolio. If they can increase this revenue share to 50, 60, which means they're getting revenue from those brands that no one else can sell in India, right? So that creates a very sizable moat. So that's something that looks interesting. The target consumer market is, going to expand, so that's good. Third, the new generation, like if you look at our parents, a lot of them were into buying jewelries and gold kharidte the. But I think to a large extent, a lot of this new generation, especially men, for them watch is an aspirational piece, right? So even from that perspective, this looks like an interesting story. Uh, so overall a good business, but at this moment valuation comfort nahi hai, so it's more of a wait and watch type of a situation. All right, so I'll move to next question. Okay, I think let me take some live questions now. If you have any questions, maybe this would be a good time to put them in the chat box. I'll try and answer them one by one. Okay. First question is from Super Mario. But if we think HNI point of view, they will buy it when it appreciates over years. You mean watches? Yeah, maybe they can. I mean, if you notice, right, there's a fairly established watch market for used watches in the US. So there are these companies through which you can buy and sell used watches. So that makes watch as a reasonably liquid investments, especially from certain brands. I feel वो trend India में भी आएगा. So and I think Ethos is already doing something on, they have a brand called Second Movement, and they've already been working in that domain. So that is also an interesting opportunity to establish a brand there. All right, next question. I'm 28 right now. How would you advise me to restart my career in the field of finance? I have some gap in my resume. I'm thinking to leave my family business. I have MS degree in finance, zero experience. Bhushan, start working somewhere, like try and get your first job, whatever domain it would be. So at least you start getting some experience, and then study for some professional program. Kuch bhi padh lo aap, depending on what you like, but make sure you study something in the domain. Sorry, I think it's my throat which is a little stretched today. Him is asking, equity research isn't demanding in Canada. Should I return to India for opportunities, or should I keep looking harder? I don't know a lot about Canadian market to answer that question for you, Hem. If you feel there is not adequate demand and that's the only area you want to work in, maybe you can consider coming back, or you can consider going to the US if you can figure out the visa, because US will always have a lot of demand for skilled professionals. Harshit, please release crash course for level 3. Even if partial covered, my alpha in CFA exam was the crash course. I'm panicking a little bit without the crash course. How much level 3 crash course is covered? Can you check with them? I think we are, वो जयदीप को पता होगा, पूछना एक बार उसको. I think we are at about 60-70% Harshit at the moment. Um, I told you Feb we would not be able to release because I understand what you're saying, but the whole philosophy at FinTree is we wouldn't want to release something which is half baked and not completely done. Uh, so we still have a lot of work to do on that crash course. I think August 2025 would be the first attempt where we would be able to release. But in either case, you please write us an email. Uh, we will see if we can help you with getting access to some of the videos. All right, Itachi Space. I scored 85% in 10th and 12th, and in graduation 78%. I have no experience in job. What are my odds in order to land up top IMAs if I secured 98, 99 percentile? I don't know, Itachi. I think I don't have a lot of experience with the IIM admission process. So I don't think I can help you on that front. Okay, I think I've taken most of the questions. A lot of questions look repetitive. I'll take one last question. All right, Aryan is asking, can you share some tips for clearing FRM Part 2? So कितना परसेंट हुआ है मतलब अभी 50%?
हाँ, बट इसमें कोर का ही होगा पूरा, जैसे अपना शेड्यूल का है, पाथवे का नहीं आएगा इसमें,
ठीक है.
so it's more than 50 actually.
70?
65,
70% of core
yeah,
or 90?
including ethics,
So 90% of core?
80 to 80.
Yeah. So I think level 3 someone asked, no? We are done with 80-90% core, but the specialization part is still pending, so that's why we are not releasing it for Feb. But anyway, someone asked for how to prepare for level 2, so I'll quickly answer that question. FRM part 2. So one, FRM part 2 has a tremendous amount of theory. Okay, and believe it or not, when I took the test, I realized a lot of those theoretical concepts were also tested. So you need to save time so that you can do multiple iterations with your studies. That's one. So finish your syllabus early so that you give enough time for revision. Second, some of the chapters in market risk and credit risk can be really mathematical. So you need to be conceptually very, very good dealing with them. So at the time of preparation, either use some prep provider material with whom you are comfortable, or use GARP and then use a lot of internet so that you fill in all the missing points and areas. And then the final tip, practice a lot of questions. The more questions you practice, the better you'd get. Expect some very large size questions on the exam. In FRM part 2, I've noticed one trick they use is, so generally when you design a MCQ question, you can make the top heavy or the options heavy, right? In terms of size of the options. I saw that in FRM part 2, there were a lot of questions where maybe the question main body was one line, but each multiple choice question had 2 or 3 sentences built into it. Like option A was 2 or 3 sentences, option B was 3 sentences. Those questions are tough to handle if you're not good conceptually, right? So it's something that you want to keep in mind. And that's it from my side. I tried to answer as many questions as I could. We would do the same. If I could not answer your questions this week, put them in the comments. Also, you can put ideas on what stocks you'd like to discuss. So next week onwards, slowly we'll start having conversation on some of these stories. All right, so that's it from my side. Thank you very much.